All right. It's 8:01, January 28th, Monday. Good morning and welcome back to the Gold Fix. Uh, Friday, well, let's start with where gold is trading now. Spot gold is trading 13 spot 10 bid at 20 right now, which is essentially Feb futures. Most of you may be looking at April futures. I am still looking at Feb, which correlates nicely with cash. All right. Gold is trading down approximately $3 from the Globex settlement. It is trading up from the COMEX settlement. Again, COMEX settlement is if you trade it, what your statement reflects. The Globex settlement, which comes in at 5, does not hit your statement, but it really is a better reflection of where the market is. That noise you hear in the background may or may not be a coffee machine. Okay. Silver is trading down 4 to 6 cents from the OTC close. The British pound. These are assets on our radar. The dollar, gold in yuan, gold, silver, the British pound, euro, the dollar yen, the yuan itself, copper, and Bitcoin, natural gas, Johnson & Johnson, and Facebook. Our list is pretty long today, and a lot of it is a Texas hedge list. You have a lot of things that are moving in relationship to each other because Friday's activity set off triggers for the VBS setups in primarily the currency markets. And if you're trading currencies, or if you're trading gold, you're basically trading currencies. So it looks like it's a currency day. And yes, Friday's activity did kind of play havoc with currencies more than anything else. So why don't we get into what happened Friday news-wise and what's ahead for us this week, and then we'll get into the actual levels on this orange list here. Hey, Friday, the government shutdown was postponed until approximately February 14th. Side note, February 14th, we have another St. Valentine's Day massacre that might be coming up. All right. For us, the FAA flight restrictions, the Super Bowl, and waning presidential approval were factors on this, especially in light of the newfound uncertainties in Venezuela and Mexico. Where once the U.S. was an island of stability for people seeking safe havens in their money, this is becoming, for political reasons, less so. Between the Venezuelan coup, call it what you want, and all its unknowns, the Fitch potential for a U.S. downgrade, which I'm guessing has been probably mitigated because of the government non-shutdown. The wall, the new threat that NAFTA 2.0 coming out of Mexico is in jeopardy. For a president that prefers a populist approach to governing, 37% approval rating was probably a sign his plate was too full. So why did gold and silver rally? Well, there are 3 reasons, only one of which matters, the only one of which the market reacted to. In days before, the ECB and the Bank of Japan met. And you can sum up Draghi's ECB speech in one sentence. We're going to keep rates lower for longer. Keep the editorial out of that. The Bank of Japan has little choice based on pot odds, but to stay its own course despite easing inflation fears. But it was the headline that the Fed was seriously considering stopping its balance sheet offload that played havoc with currency markets. That started right after, I think, the gold fix on Friday. When you hear the phrase stopping or slowing its balance sheet offload, that's basically one half of QT. Quantitative tightening, if you need a refresher or if you don't know what it really is, despite the prevalence in headlines, quantitative tightening is the simultaneous raising of interest rates. That means reduction of dollars available in the market with an issuance of debt. The issuance of debt, we can get into how they do that some other time. But basically, the Fed is trying to offload its balance sheet or reduce its governmental debt by funding its debt in the markets. Uh, but because that would make interest rates go up and be inflationary, they simultaneously take dollars off the market. So you have in a QT environment, which is the inverse of QE, less dollars chasing more debt. One of those two things stops, you don't have QT. So Powell, or the Fed, has hinted as a preview of the FOMC meeting this week that they would be reducing, slowing, stopping. I don't know what euphemism was used. The offload of debt, which means the government would retain debt, which is on the face of it, on the surface of it, bearish for bonds. It's bearish for dollar, and it's basically it's not a QE. You could still raise rates, so just not going to be according to that statement. Uh, Floating more debt into the market, so they're backing off on unloading their balance sheet. Uh, Now, that's ironically bullish for stocks because the way the market has been acting for the last, I don't know, 10 years is that uh, debt is good for stocks. Or easy money is good for stocks, and the market reacted accordingly. So fundamentals were again suspended with that reaction. The big movers uh, on the non-equity side were the dollar was weaker. The euro reversed hard after having a very weak session during the ECB, and of course, precious metals, which is what we're here to talk about, rallied hard. And not only did they rally hard, they actually followed through. Shocking and rare. If you follow me on Twitter, I follow Linda Rashke, who is a trader in the same vein, I think, as Larry Benedict, uh, our benefactor here, a market wizard in her own right, who is a momentum trader. And for Linda Rashke to tweet about the metals having a momentum day higher, it's like a blue moon. And she was right. These things rarely happen. And when they do, you have to laugh because you're usually not at your desk when they do happen. But we were at our desk yesterday, or Friday, I should say. And fortunately, we were all over it. Does not mean we didn't miss other trades. When you trade the way we do, even though we're using an algorithm type system, you must, and I say this to all active traders, you must triage your choices. For example, when I get a buy signal in gold, I frequently get one in silver. I frequently get a sell signal in the dollar. And you can't trade all three of these things because they're highly correlated or inversely correlated. You're Texas hedging. And in the early days when I started using this system in 2012, I would trade everything that gave me a signal. And part of that was to learn the system, if it was good or not. And the other part of it was just uh, uh, naivete, thinking that maybe they weren't so correlated. And sure enough, I would get stopped out of everything. But the first thing I used to get stopped out in, whenever I got a gold and silver signal in conjunction with, say, a euro signal or a dollar signal, was I would get stopped out of the metals first. And that's because they're more volatile. They're not 100% correlated. But my point here to uh, active traders, beginning, intermediate, or advanced, is if you have a system and it triggers four or five things that may or may not be correlated, and maybe you don't know, I happen to know, but maybe you don't know if they're correlated. It's important to pick the ones that you feel or your system says are the best to do. And I'll tell you why that's important before getting on with the data here. It's important because if you're trading, I'll pick a number, $100,000, and you have a risk management mandate, self-imposed or imposed by an investor, that you can only lose X percent a day, 1% a day. Uh, then if you can only lose 1% a day and you're carrying four positions, I don't care how automated it is, your stop losses have to change. Your volumes have to change to keep you within that 1% loss a day parameter. And so I would rather trade one product with a $10 stop than four products with a $2 stop each. Uh, the the uh, the idea basically is one, uh, go with what is the best, whether it's your intuition or what your system says. Two, manage your losses or potential for losses that way, and make sure you have an extra bite at the apple so you can at least trade twice a day. When I say you, I mean me. That's my discipline. I want to be able to trade two times a day. I rarely have more than one position on at a time. I regret that I did not buy silver above 1530 because of my gut, which was based on physical demand in the 1530 area. But I did not get a signal. So I bought gold and I made some money. I would have made more money if I bought silver, but I could have lost my hat. So let's go to uh, uh, what happened or what we have on our radar today. If you want to know why we did what we did on Friday, you can tune into the gold fix that is on Opportunistic Trader in the video section. I'd like to rehash that, but I don't have a lot of time because we actually have a big list. And I think it's kind of worth their while coming off of a good trading day to explain this because there is increased interest now. Remember, this system at best is right 50% of the time. It is not a technical system, although technicals do help it. Uh, uh, the key to it being profitable is managing your risk. So if it's right 50% of the time, as opposed to say a trade system that's right 30% of the time uh, or 70% of the time. Let's just stick with this. If a trade system is right, if a system is right 50% of the time, it's a coin flip. So what's the advantage in using it? Well, the advantage in using it, Socratically speaking, is that you have a quick turnaround when you're right or when you're wrong. You know quickly, which frees up your cash to trade again. Number one. Number two, the edge that my system has, which actually is a derivative of something that Linda Raschke did, is that it tends to pick direction and catch impulsive moves and much bigger moves. So a market could begin a rally of, a 10% move. I'll catch the first half a percent in 2 hours. That's the impulsive part of it, the breakout, so to speak. It doesn't buy pullbacks, et cetera, et cetera. Other systems or people who don't use systems, they could be right 70% of the time. And that's because their edge or their asymmetry is in identifying correlations much better. But that's too subjective for me. I am a subjective trader. And as a result of that, I sometimes see relationships that don't exist, and that is a danger for me. So as a result, VBS was created to adapt a gamma hedging system, which was incredibly disciplined. Uh, uh, to a directional move. So why don't we go through it? All right, for today, because technicals are involved. All right, starting with the dollar. All right, the dollar. All right, these are not. I'm not saying you should be trading these, but on an hourly basis, above 95.87, below 95.72 on an hourly close, uh, potential range breakout. And I put this up here just because I always watch it. Uh, because looking at, I put it up in the daily. If you look at this compared to in your mind the U.S. Gold in dollars, this is nowhere near potential for a daily breakout, which we got on Friday. Which says to me, if you value the gold market priced in yuan like I do, it says to me we're still in a range, at least in Chinese terms. Gold. Okay, gold was the classic get long, get out, get long again, you idiot. Okay, we have been talking for this period of time about gold having a breakout. And for reasons we won't get into detail wise, you can read previous ones. In this bar, which happened, uh, says one. I'm not sure what's going on here. Uh, oh, it was was it a 1 hour? I think it was a 1 hour. Yeah, we had a 1 hour breakout at 8 a.m., which I ignored because Sometimes I trade the first hour, sometimes I don't. But right at the end of our broadcast at 8:30, uh, the market just took off and actually caught me by surprise. Luckily, I got a trade on. All right. So after this 4 hour period, which ended at 9 a.m., uh, one should have bought that close, which came in above. This is actually my level. Came in above a little above 1288. We did buy it as shown in the chat, and we wrote it up to we bought it at 1288, risking 1285. So the stop is already in. It comes back to the Bollinger Band. Market didn't go down, and as you can see, very impulsive move. We kind of panicked, being old gold bugs that we are, always worried that someone's going to stomp on it, and sold it in the 6.5 and 7.5 area, combined average of about 97, which is a nice 2-to-1 ratio. But the smart players, I happen to know one out there, uh, uh, trusting the system more than I did, just started to trail their stops higher, and how they trail them is up to them. But now we are in a section in the 4 hour. I want you to look at this for a second. We're back in the 4 hour. This is a negation of momentum. It doesn't mean we're not going higher. It doesn't mean this isn't a bull flag, temporary to go higher. It just means that the impulsive part of this 4 hour move is over, which brings us to the daily. The impulsive part of this 4 hour of this daily move has just begun. All right. So late in the day, with the market trading, and I said as much, if the market was trading between 88 and 92 late in the day, that 4 hour signal would snowball, would increase into a daily signal. Now, daily signals are really, if you look at this chart, it's really hard to buy into. I mean, you just had a massive move, and you're saying, come on, give me a break. I mean, it's going to breathe a little bit, right? And that may be true. But let me just try and lower this to get this these arrows out. All right, here we go. So one should have been a buyer at the bell of gold, because at, believe it or not, this price, which is 1303, well, not, I'm sorry, 12, close, 1302 spot 91, which is completely consistent with technical numbers saying 1300 to 1302, 1300 to 1340. Fortunately, in a little front run of myself, because I had the 4 hour at my back, I came back in and bought in the 1288 area again. We had a pullback. But if you look today, right, I'm long at 1288. Uh, that's my entry. But go back to the, as one of the subscribers, one of the experts said, as Paul Tudor Jones said, and as I frequently paraphrase, you're long or short at settlement. And for me, I am long at the close. And for me, that's the Globex close, which is 1302.91. Now the market's lower. Am I nervous? On paper, I am not nervous. My stop is where this red line is. That is my stop, period. Uh, but I am nervous because it's not on paper, because I'm human. And I'm nervous because we did have this big move. We are coming off slower. I would have loved to see a gap higher, and then I could trail my stop up to 1302.98. As it stands right now, I'd like to trail my stop up, but I don't know where. I really can't tell you where yet. But you're supposed to be long from the close. Now, if you want to come in there and buy on the dip, as long as it's above this area, you're not trading a momentum system. You're trading a retracement on a breakout. It's not volatility momentum, which brings me to the hourly. Because I'm looking for clues as what I should be doing here. And the hourly is where I start to get scared. Below 1298 and change, we have a potential, although I'm not saying it's a definite, for an hourly breakdown. Again, we could break down to 1293 and then reverse, but we do have an hourly breakdown. As an active trader who took a position home at night, I would like to be out if the market breaks and I get a signal below 1298 and change, so I can rebuy it in the 1292, 1288 area if I still like the market. So on my radar, and not definitive, I am looking and concerned that in 38 minutes or in an hour and 30 minutes, if you look at a little timer there, if the market is below 1298 spot 29, I'm going to get out likely. And I don't have a half position to get out. I took home a very small position after having a nice day trading and called it a tail basically. So I'm not getting out of half. The smart thing for me to do, frankly, would be to trail my stop loss, which is actually uh, a little bit of a stop profit higher and let the market take me out. You can use technical lines, but I'm tempted to use 1298.20 basis Feb as my stop level. And we're spending a lot of time on gold because not because I made money. We'll do this when I lose money too, because it's so textbook what happened yesterday. And it's just so rare. Gold people need to have something to talk about. When the 4 hour system, the one that the one that gave us a signal higher, the 4 hour system says get out of Dodge if you're a momentum trader. How's that? Weekly, weekly gave us a buy here. We got long, and that's a macro position. This scared us. We got out, and lo and behold, it made us wrong. So we'll move on from there. You know where we stand on gold. The daily says be long. The hourly says be careful. And who the heck knows what's going to happen? And when we get to the events, I'm dragging a little bit. So let's go through this quickly. Silver, looking for a breakout in silver. I did not get one. I do not have one. We did not get a signal to buy silver on the daily on the close. And in fact, we have a signal to not be long silver. In fact, you could play, if you want to play the regression to the mean game, you should be short silver below 1573. Again, this also scares me. To the dollar, reasons to not be scared. Well, the dollar started out, this is a 4 hour, bouncing and is now coming off again. Now, this is kind of like pulling a page from Larry's book. How do silver react to the dollar weakening again? You know, if you see the dollar come off 20 pips on the DXY and you see gold unchanged, that might be a signal to get out because gold reacted very violently to a weak dollar yesterday. If it doesn't today, that means you're running into some selling. British pound. British pound, I have a level, I don't have the right chart up, of 131 as a level to be careful if you're long. Where does that come from? That comes from, I think, the weekly of all things. Yeah, we have a weekly breakout, which is already being negated, but you're still above 131. All right, things that are of interest, I think, to most traders. Uh, Bitcoin, we'll look at it in cash. Bitcoin, I really am interested in because this, folks, is awesome. This is Bitcoin saying if we settle the day below 34.33 or above 38.26, I'm going to get a signal. Now, it could be a false bottom. Be ready to reverse at that level. But Bitcoin has been flatlining for a long period of time. And if you want to look at it from an hourly point of view, it's negated a sell-off. Watch Bitcoin. Natural gas. Here's one that I missed. I've missed two natural gas ones in 2 days. But natural gas last night, when we start with the hourly, last night just opened and gapped lower. Not didn't gap lower, but traded lower 8%. And in the process, triggered a 4 hour sell signal, which says you should be short as long as we're below, and I put a line there, as long as we're below 302. It's my opinion, as Bryn Kelly has noted, we've got option expiration going on. We've got headlines that are telling you this, that, and the other thing. But if you're a fundamental person, you want to understand why things are doing what they're doing, ask her about the pipelines, ask her about the connections. But just speaking as a person looking at this as a trade, uh, there really was no trade here. The 4 hour came in, you would have sold it here and you would have chopped up, and now we're back in sideways. We could have a leg lower, unsafe for me, but if you're short, be comfortable being short below 302. Option expiration, maybe we pin there. I want to go to copper, copper cash. Copper cash, I don't have levels in, but it looked a lot better last night when I went to bed. Copper is giving me a signal to sell right now on the cash market below 269.79. So in 33 minutes, I will consider selling copper in the futures market with a target 2 times the stop loss. So on my radar is to be short copper, which is another reason for me to be out of my gold long. All right, moving to stocks. Uh, I frequently look at Johnson and Johnson because Tom is always drawing my attention to it. Uh, because it's a great little thing there. All right, Johnson and Johnson is flatlining for a long time, and it may continue to flatline as it licks its wounds. But you do have what is essentially, and I don't have all the parameters here, a reason to pay attention to Johnson and Johnson above 130 spot 21 and below 126 spot 51. Whether that's a bottom to buy or sell, I don't know. Facebook, I only put that up there because I read a report yesterday that from 13D that says there's more to go to the downside, and it made me think: is there anything on here that makes me want to trade it? And sure enough, nothing is here. But why did I? Oh yeah, here we go. On the monthly, right? I mean, Facebook has had some massive moves on the monthly. Not something you want to be an active trader on, but on a monthly, above 143 spot 57, everything is safe. We are approaching the end of the month. If we're below 143 spot 57 at the end of the month, I would consider putting on a macro short. And that means a small position that I'm willing to tolerate some adverse moves on. So uh, why don't I pop up the markets? Uh, and all right. And while you're looking at that, we'll go through a couple things. And I think you can look at that, and I'll pop this up. Okay, this is an extrapolated commitment of traders. 25th of January. I forget the gentleman I got the information from, but I do like his work. He's pretty level-headed. But he's basically saying managed money got longer in the rally. I do believe that. You remember in the past I said weak hands to strong hands. I'm still not sure the strong hands are long, but I do know that we are above that channel. Next, uh, some pictures of the trades. Someone showed me what the gold fix was. It's actually a putty. Okay, technicals. I want to draw your attention on the left to the blue numbers. Some of those numbers corresponding with the VBS, and some of them do not. You'll notice 1298 spot 10 is where Michael Moore uses for settlement. That is the COMEX settlement. Above the market, 1304, 13,132.5, 13,380. Those are levels that he has as resistance slash support. He has a gap above that because he looks at the COMEX US time. Below that, he has 1293.70, 1295.40. I note those. I'm not saying those are important, but I note those. 1277.60, 1276 coincide with numbers that I have. Moving over to his writing, note the highlighted area, the decent trade above 1296. Also warned of continued higher trade. We've seen $6.80 of this so far. Michael is excellent at calling macro moves, and that is a problem for him because retail people want to understand the short-term moves. You have to know how to read his stuff. Do you want to pay $5,000 a month? Well, I'm not telling you to buy it. I am saying that if you spend that kind of money a month, you can make a lot of money. All right, decent trade below 1278.90 will project us down $25 minimum, $40 maximum. That kind of stuff scares me, and I see where he comes from. Upside, sell against 1308, 1309.70. So for that, that makes a lot of sense to me based on the daily system. My target is now 1308, 1309.70. If I remain long on the VBS, and I would suggest heavily that people look at that, especially if they got long in the 1302 area with a 1292 stop out. I got to wrap up. Is it? Oh goodness, it is 12. It is 8:30. Please stay with us. Larry Benedict will be going through the market this morning, and you don't want to miss this. I'm Vince Lanci, cutting it short. You can look for me in the chat room, and we'll talk about it.